Good morning, everybody. It is finally Friday. It is Friday, the 28th of November, in fact. Yeah, we're nearly all the way through November. Not quite sure how that's happened so quickly. You join myself and Mr. Michael Brown for the Morning Blast, where we give you a fairly raucous preview and review of what's been going on and what we hope is going to be going on in markets. As usual, a friendly reminder that this is all recorded live. There's no editing, so apologies for any expletives, etc., and any off-kilter rants that we do take part in rather on this show. Also, nothing we discuss here is trading or investment advice. Nothing we say is an endorsement of anything unless we make it very, very clear. Michael, how are you?
Well, a very good morning to you, Ryan. Good morning, everyone. A very happy Friday. Belated happy Thanksgiving to any of our American listeners. Yeah, not too bad at all, actually. Not too bad at all.
Well, we did say the Thanksgiving weekend, normally everyone does just clock off on Wednesday and doesn't come back until, some don't come back until the new year. But, we say people don't come back until Monday, but it definitely feels that way with the CME this morning. Obviously,
I was going to say, we didn't expect them to just start unplugging things, did we?
Yeah, but when we say unplugging things, more a case of unplugging the fans, because it seems to be a cooling issue at the data center.
Yes, that is exactly what it is. For those who are unaware of what we're on about, at about 2:45 London time this morning, trade was halted in all CME futures products, as Ryan rightly said, due to a cooling issue at a data center that's operated by a company called CyrusOne, who no one had ever heard of until then, but now I think everyone has heard their name multiple times this morning. The interesting thing is, of course, this is not just impacting CME futures in terms of the S&P or crude or whatever. It's also having a knock-on impact on other trading platforms as well. So EBS, which is a very widely used FX trading platform, that is also down as a result of this outage. It was going to be a pretty dull and dead and thin session anyway. This is just going to make things even duller and even thinner in terms of liquidity and even lighter in terms of trading volumes. We don't actually have anything from the CME. I'm currently looking at their brilliantly named Global Command Center Alerts, which sounds like they're launching a mission to the moon. But they have basically said they're working to resolve the issue and will advise of pre-open details as soon as possible.
Nice to just opening a window, perhaps?
Well, I was going to say, and I did put this out jokingly on Twitter at 4:30 this morning, can they just keep them halted all day? Given that we are on for an early close today anyway, they better get things done quickly, otherwise the day is just going to disappear.
Yeah, and they definitely will want to try and have at least a couple of minutes open, because they will want to see for settlement processes and stuff like that. It would be nice.
Yeah,
I suppose.
And I was...
Go on, sorry.
Sorry, I was going to say, that is important. You do need some sort of a tape to actually be able to settle things. But the other thing, I was talking to a couple of journos this morning, if this had to happen on any day, today is probably the best day for it to happen, because we're all going, fuck all's going to happen anyway. So in a way, they've kind of got away with it a little bit, but it's still pretty ridiculous.
No, absolutely. But I think you made a good point about the knock-on effects as well, because obviously a lot of pricing is implied from CME pricing, various markets and various retail exchanges, etc., maybe not so much the FX, but obviously we know that significant FX volumes are down anyway. It's significant FX marketplaces are down, but even in terms of S&P futures, NASDAQ futures, all these kind of things, they all, it's basically a CME pricing all the way down, basically.
Yeah, absolutely. Yeah, I was going to say something I probably shouldn't on the call.
Probably not.
Live call then. So we will. Yes, Pepperstone is still open, and that's something I was going to say, but I won't say it. Yeah, I mean, apart from this CME issue, to be honest with you, I haven't actually got that much to go through this morning, because, of course, yesterday was Thanksgiving, so there wasn't especially much going on. I guess the main...
Tell you what we can do. So obviously we didn't have a show yesterday, mea culpa. And so I didn't get your reaction to the budget. So in a very short, in one sentence, here we go, in one sentence, what is your opinion of the budget, the UK budget?
Oh, well, yeah, obviously the UK budget. Uninspiring, but could be worse, I guess, is probably the best way to put it.
Far tamer than what I thought you were going to say, but yeah.
Well, I think actually the biggest issue, and we won't go through all of them.
Stop the press. I've just had a text from CME due to the cooling issue at Cyrus. Due to cooling issue at CyrusOne, data centers are markets currently halted. Supporters work. Oh, it's just an update to say that. Yeah, okay.
Oh, Ryan, you had us
Do you know what?
going then.
Yeah, so did I. Do you know what? It's one of those text messages that they've sent out just because they feel like they need to update people, and it's literally the same as the one from before.
Oh dear.
Oh, God. But anyway, sorry, the budget.
Back to the budget. Yeah, I think we won't go through all of the policies because that's
No.
been done to death by now. But I think the big thing for me, and I think markets are going to digest this over the next few days, because obviously there's a lot of policies to go through. I think 80 odd individual changes. The big thing for me is that you've got a lot of spending increases that are what we would call front loaded, i.e. they happen within the next 18 months. And then you've got all of the tax increases, certainly in terms of freezing income tax thresholds and all of this sort of thing, which don't come into effect for another 3 to 4 years. So they're very, very backloaded. So that's a problem in and of itself. The other reason why that's a problem is because those backloaded tax hikes are due to come in either 2028 or 2029. And if the government lasts that long, one of those will be an election year. Now, are you seriously telling me that a government is going to deliver significant tax hikes in the April and then go to the polls in July? Because if you believe that, then I've got a bridge to sell you. So I do think there are questions over the actual credibility.
It's a classic. It's a classic, right? It's they're basically increasing spending right now, and they've got all these measures in place, but none of them are really going to hit. But they're in there so that on paper it balances the books. But you've just got this lag between spending and having to pay for it.
Yeah, and that's exactly what it is. As you say, on paper, you've got this 22 billion quid's worth of headroom, but in reality, are you going to raise the amount of revenue you expect to raise from these tax hikes? And two, are they actually going to come in the first place? Because, either this government could decide that it's political suicide to go down that path, a future government could rip the whole thing up and start again. We just don't know. So I do think, at risk of sort of quoting Rachel Reeves, you could end up with another fiscal black hole. The last thing I would say on the budget is the other big question that obviously everyone wanted answered was, does this sort of materially reduce the risk that we're going to be here this time in next year going, let's do some more tax hikes? And actually, no, it doesn't, because there's actually a line in the OBR's report, which I've got here, which says, and I quote, "We have assessed that none of the policy measures in this budget have a sufficiently material impact to justify adjusting our post-measures potential output forecast." Now, that's a very, very wordy way of saying there are zero measures in this budget that boost growth.
Yeah, no, exactly. A very polite way of saying it.
Very polite. And so polite that they got that document out 40 minutes early, which was even more polite of them.
They say 40 minutes. Apparently, this could have been released up to 24 hours ahead of time, but just no one noticed.
Yeah, I mean, they have had an absolute shocker there. They are going to be publishing a report on that.
No later than December the 1st.
Yeah, either today or Monday. So we'll see what happens there. Apparently, the head of the OBR said yesterday he's mortified by what happened. Well, yeah, I mean, so you bloody well should be, mate. Yeah, it's an absolute mess. Anyway, besides the budget, just a couple of other things from me this morning before we move on. We did have some OPEC sources doing the rounds yesterday. Reuters noting that OPEC Plus is expected to hold oil output steady for the entirety of Q1 at its meeting on Sunday. That would be in keeping with what we've heard previously. We also had minutes from the October ECB meeting. You can tell it was a slow day when we're bothered about those. But the only interesting line in the minutes was that various policymakers argued that projections for 2028 had lower information content and limited policy influence, suggesting more weight on the near-term outlook. The reason why I bring this up is because in the aftermath of that October ECB, there were a few sources stories doing the rounds saying along the lines of the Dubs are pushing for more accommodative policy because of the 2028 inflation forecast. It seems that is not necessarily the case. On the trade front, we did hear from President Trump yesterday. He was musing that the US could potentially cut income tax completely because of the proceeds that they're getting from tariffs. This is something he said before. It's also something that's getting ridiculous because, one, tariff proceeds amount to nowhere near the income tax take in the United States. And two, these proceeds of tariffs have been pledged for about 15 different things now, ranging from getting rid of income tax to paying down the debt to these potential stimulus checks he's been talking about. I don't think any of of them especially likely to happen, to be completely honest. And well, really, the last thing from me for the time being is the FT. We're talking citing sources yesterday, noting that a group of US banks is in talks to lend another $38 billion to Oracle in order for them to build some data centers and fund further sites for OpenAI. If no one's looked at it recently, the Oracle stock chart is, well, it's a mess, to be completely honest with you. They're basically back down to where they were before that 2030 sales guidance that they issued recently, which perhaps isn't too surprising.
I'd tell you what, just on that, worth flagging, because I'm only going to say it in about 5 minutes' time otherwise. OpenAI, so one of the lines from the Overnight News Roundup is on OpenAI, and OpenAI's data center partners are on course to amass almost $100 billion in borrowing tied to the loss-making startup as ChatGPT make benefits from debt-fueled spending spree without taking on financial risks itself. So, yeah, it's it's a little bit of a crucial point there, or maybe like a little bit of a risk factor. All of this debt that's been amassed to kind of lean on OpenAI and all these partnerships and what. I think it feels like you only need one or two of these to fall apart, and dominoes could be everywhere.
Yeah, it's definitely something we need to keep an eye on, and it's in a way, it's quite clever from Sam Altman and the OpenAI people to go, we want all of the upside and none of the risk.
Oh, I mean, yeah, if you can be a pound behind it, definitely.
Well, yeah, exactly, which they seem to have done quite well on. But yeah, that's pretty much it from me this morning. To be honest with you, there's really not much going on. So I don't know what Zach has scraped the barrel and found for his roundup.
Well, as usual, Zach's done an amazing job for the Overnight News Roundup. And if you don't already follow him on social media, or if you don't already subscribe to our Substack, what the hell are you doing with your life? So what have we got? So we've already commented on the CME outage, so we'll float past that. And speaking of floating, Trump floats eliminating income tax. US President Trump said on Thursday his administration may slash income tax completely over the next couple of years because the government revenue generated from tariffs. Believe that, if you will. Also, Trump announced on Thursday his administration will work to permanently pause migration from all third world countries to allow the US system to fully recover. Sticking with the US, online sales in the US on Thanksgiving holiday are expected to rise 6% compared with last year to reach $8.6 billion. That's according to data from Salesforce showed yesterday, suggesting shoppers were lapping up steep discounts from retailers to splurge amid tariff-induced macroeconomic uncertainty. Japanese PM Sanai Takashi ruling coalition added that 3 independent lawmakers securing a majority in the powerful lower house of parliament. This is ahead of 2 key budget votes, so good news for them. Sticking with Japan, Tokyo's inflation, my favourite CPI print, held steady and industrial output unexpectedly rose, keeping the Bank of Japan on track to consider interest rate hikes in December or January. Japan's 2-year government bond auction Friday was met with weak demand as rising expectations of a near-term rate hike sapped investor appetite. What else we got? China's factory sector, that's expected to contract again. This is according to a Reuters poll that suggests that the sector will likely shank for an 8th month in November, according to Reuters, highlighting the dilemma facing policymakers over whether to press ahead with tough structural reforms to rule out further stimulus amid faltering domestic and external demand. China, back to them, their top leadership called for effective prevention and mitigation of all types of risk to ensure social stability. That's according to the Politburo. They stressed the need to refine social government systems, maintain strict stance on anti-corruption, and promote deepening reforms. What else we got? German approves military spending. German lawmakers are set to approve spending of 2.9 billion euros on 11 military procurement contracts, including for drones, rifles and missiles, in deals that would go largely to domestic manufacturers, so Rheinmetall, etc. What else we got? UK property market and fiscal concerns. UK house prices fell over the 4 weeks ended November 23rd as buyers stayed away from fears over higher property taxes in the budget. Investors are anticipating a radical shift away from longer-term borrowing, and UK government said it was considering selling more short-term treasury bills.
Sorry, go on, wrap that up and then I'll jump in.
No, I was going to say the pound is likely to slump as the UK approaches its tipping point where tax hikes no longer bring in extra money by the government. That's according to hedge fund manager Steven Jen.
Oh, yeah, well, I mean, sterling's fucked. We all know that. But on your point on the housing market is a really interesting one, because obviously with this so-called mansion tax that's now being brought in, or supposedly going to be brought in from 2028, it is going to create massive distortions in the housing market, because you've got the first sort of surcharge kicks in, I think 2 million quid.
Yeah.
And then I think the second level is 5 million quid. So you're going to have a lot of houses that suddenly pop up for sale that are worth
Already happened.
£1,999,999.
Already happened. So Merrin from Bloomberg, she posted this morning in one of the papers, there's like, what can you get for 1.95 million?
Oh, well, there we go. Yeah.
Exactly that.
Yeah, and actually it is going to result in the prices of a lot of houses falling, certainly at that top end of the market, because you're taking on a greater liability now.
Well, no, exactly. And as all these things, it all has follow-through effects, etc. So, yeah, definitely want to keep an eye on, because as we know, the UK housing market is kind of quite pivotal to pretty much all aspects of the UK economy.
It is also, at the moment, effectively seized up and just not going anywhere. I mean, you look around anywhere, certainly here in Blackheath, there's been houses on the market for 6 months. They just won't go.
And we talk about unofficial mandates for central banks and policymakers, and the cost of housing is an unofficial mandate at the very least, in terms of keeping that propped, because of all the equity that people have in the market. But anyway, no, very good point. Something that we will no doubt be talking about as the weeks move on. In geopolitical news, briefly, US signals Venezuela land operations. Apparently, according to President Trump, US will very soon, that's the quote, start taking action to stop suspected Venezuelan drug traffickers on land. So one to look for there, obviously the first one that takes part and that they announce will get tons of coverage. The Ukraine anti-corruption probe escalates. The Ukrainian anti-corruption watchdog on Friday raided the office of President Zelensky's top advisor in a bombshell development to the snowballing graft probe. Sigma geopolitical news. China continues pressure on Japan over Taiwan comments. Japan has yet to show remorse for or retract PM Takashi's comments about Taiwan, despite multiple stern representations from China. And this, according to the People's Daily newspaper, says in commentary published on Friday. And Israel and Syria border flare-up. Several Israeli soldiers were wounded in a deadly overnight battle with militants during an operation inside Syria, one of the worst flare-up near the country's border this year. And just some equity news before I hang back. Obviously, done OpenAI. What else we got? NVIDIA's CEO in Taiwan. Jensen Huang is in Taiwan with his wife and daughter on a quiet Thanksgiving trip, the fifth visit to Taiwan this year, in just a few weeks after attending TSMC Sports Day. He'll reportedly visit the founder of TSMC later on today, Maurice Chang. JP Morgan's Diamond approved lower London Tower after UK assurances. Obviously, this follows JP Morgan's huge new HQ in the US, which by all accounts is a pretty marvellous building. What else we got before I hand back? Just for the old time's sake, China's Vanke has been downgraded. Anyone remember that property developer, one of the ones that expected to bring down the world? They've been downgraded by S&P Global to unsustainable due to its weak liquidity levels. And I believe that's it from me. What else? Nope, that's it. Nothing really of note.
Cool. Good stuff.
Cool.
Thank you, Brian. Great. Well, in terms of today, then, it could be quite a dull one, if we're being honest.
I would say pub, but I'm in Somerset, unfortunately, so no pub for us.
Go and find some scrumpy or something. But yeah, as for markets, I mean, no one can really do anything because obviously the CME is down and the EBS is down and God knows whatever else is down. Obviously, the liquidity is going to be very, very thin as a result of that. And
like your Barnet.
Like my Barnet, and also as a result of US desks still pretty much all being away as a result of Thanksgiving. Of course, we are still waiting to hear from the CME as to when they get things back up and running. In terms of the calendar, though, we do have a couple of things on it. At 1 o'clock this afternoon, we get the latest inflation numbers out of Germany. Headline CPI is seen having risen by 2.4% on an annual basis in November. That will be up from the 2.3% that we saw in October. And then half an hour later, at 1:30 this afternoon, London time, we get the latest GDP stats from Canada. The economy is set to have grown by a pretty meager 0.5% on an annualized quarter-on-quarter basis in Q3. But that would be a vast improvement compared to the 1.6% contraction that we saw in Q2. Only other things worth mentioning this morning are, of course, that as of close of play today, the Fed's pre-meeting blackout period will come into effect. Money markets still pricing about a 9 in 10 chance that the FOMC will deliver a 25 basis point cut at that next meeting on the 10th of December. And of course, given that it's a Friday, do beware the potential for any gapping risk over the weekend and into the open on Sunday night or Monday morning. And that potential is obviously slightly exacerbated given than the fact that nothing is moving at all right now. So yeah, that is pretty much it for me for this morning and for this week.
And that's it from me also. So it's good night from, goodbye from me and goodbye from Michael. I thought I was doing a bit of the two Ronnie sketch, then I got caught in the moment.
Went a bit wrong, didn't it?
Yeah, it did. I was close. But yeah, on that note, listeners, thank you as always for tuning in. We really do appreciate you, especially the fact that the podcast is now starting to grow since we've moved it away from Twitter Spaces. So thank you so much for all your continued support. Much more to come and bigger things to come as well. Loose lips sinks ships. From me and Michael, both wish you an amazing weekend. Keep it tight, look after yourself, stay safe, and we'll see you all on Monday morning. Much love.
Indeed. Bye for now.